The big news in April was the first Tuesday of the month when the Reserve Bank of Australia paused its rate hiking cycle after 10 successive meetings. The rise in the official cash rate from 0.1% in May 2022 to 3.6% in March 2023 was in response to a surge in inflation and was the steepest and fastest on record. The challenge for the RBA now is to navigate the very narrow path of controlling inflation while avoiding a recession. The RBA stated that global inflation remains very high and noted that the global economy remains subdued, with below-average growth expected this year and next. It anticipates tighter financial conditions, which could be an additional headwind for the global economy. Of course, the RBA knows that the full impact of 10 successive rate rises is yet to be borne from the figures, which would have been front of mind in deciding to pause in April. It noted that monetary policy operates with a lag and that the full effect of this substantial increase in interest rates is yet to be felt. In short, the RBA believes that economic growth will continue to slow, but not to negative levels. It believes that inflation is at or past peak. It anticipates that goods price inflation is expected to moderate in the months ahead. On that basis, it might sound like mission accomplished. But like all good economic arguments, there is the other hand. It knows that returning an inflation print of 7.8% in December 2022 back to its target range of 2 to 3% is challenging. While Australia's inflation rate is lower than many developed economies, the RBA must know that in a global environment of high inflation, Australian exceptionalism is unlikely. Services inflation, for one, appears to be sticky and may take some time to come down, particularly with rents continuing their upward trend. Accordingly, it has left the door open. In RBA's minutes from April, it noted that some further tightening of monetary policy, rate rises, may be needed to ensure that inflation returns to target. So, it's less of a pause signaling the end of the rising cycle and more of a pause to wait and see. Whatever the outcome, interest rates are at or very close to the top of the cycle for now. The Australian economy continues to perform well, powered by a fully employed workforce, diversified economic engines, and resilient households. Thank you for listening to our monthly economic update. To listen to more updates like this, please subscribe to our YouTube channel.